on and talk about some earnings now. Tata Technologies posted a mixed set of Q2 earnings, with its revenue growing strong but margin declining due to a one-off cyber incident-related consulting fees. Warren Kevin Harris, who's the MD and CEO at Tata Technologies, is joining us now. Warren, thank you so much for joining in. You had told us growth would pick up sequentially from Q2 onwards. In Q2, constant currency growth of 4.5%. Would you say this performance meets or exceeds the expectations that you had set then?
It's starting to align with the expectations that we had at the start of the year. As you might remember, we were relatively bullish as we came into the fiscal year. President Trump then announced the tariffs. Not only did that affect the US market, but it also had implications in terms of the product plan and the expectations that some of the European OEMs had for the US markets. And so, I think everybody took a pause in the first quarter, and then we started to see clarity come to bear. And against that, decisions have been made that we've been able to intersect with. So we're starting to get back to where we expected to be. And as you confirmed, it was a very solid quarter for us.
Warren, hi. Morning, and thank you very much for joining in. Now, you've called out Q3 as a period of tactical challenges. Can you elaborate what exactly it is that you foresee?
Q3 is always a soft quarter because of the festivals and Christmas. We're rolling out our salary increments from October the 1st for 88% of our employee population. And we're also supporting our customer JLR in the UK as they're grappling with the cybersecurity challenge that has impacted their operations in September. So those are the headwinds, but they really are, as I've commented, they're tactical, and we certainly do not think that they are going to get in the way of the momentum that we're building.
Interesting. Warren, there was a lot of issues with regards to the cybersecurity incident at JLR. And has there been any impact as such on your company, and will there be any spillover if so?
Well, it had an impact on their entire operations. And so from the perspective of our activities, it was disruptive, but it did not have any financial impact in the second quarter. And right now we're working with the JLR teams to get some visibility in terms of what the disruptions will mean in Q3. And as of right now, we're still working through that.
But what led to the margin decline that we saw in Q2 versus Q1 this time?
Yeah, we had some one-off expenses that we incurred as a result of the cyber attack that we were exposed to at the beginning of the calendar year. There were some consulting expenses that we incurred. If you adjust for those one-off expenses, our actual underlying operating margins were 16.4%, which was an improvement upon the first quarter. So not only did we see some sequential improvement in top line, we were also able to translate that into margin improvement.
Okay. Other than the seasonality and the furloughs, are there any other headwinds that you see to the top line in Q3? And what about margins? You spoke about what led to the Q2 margin drop. Will margins further decline in Q3?
We are very, very confident in the context of H2 and the run rate that we expect to take into FY27. But we are still grappling with the issues associated with the disruption at JLR, and so we're not in a position at this point in time to make any commitments with regard to what that particular challenge will mean in the short term and specifically as it relates to Q3.
So Warren, basically you're saying that you have no clarity on how long this disruption associated with JLR take to resolve itself. Is that what you're trying to say?
We are confident because we're in the midst of bringing up their systems as we speak, and so we are very confident the JLR operations will be back to normal fairly soon. But how they then look to recover from the disruption in September is still what we are working with JLR on. And so once we have clarification on that, we'll be able to confirm exactly what that means.
In that case, what happens to your medium-term margins target of, say, 18 to 19 and north of around 20%? Does the margin anticipation get pushed out in the future in that case?
I think we are still expecting and very much planning on getting back to 18% and pursuing the North Star of 20% margins, which has always been our aspiration. And certainly our goal right now is to ensure that our run rate as we end the fiscal year is at that level. Now, whether we achieve that in Q3 or whether we achieve that in Q4 will relate to some of the issues that we referenced before.
But just getting back to that point that you were saying, Q3 tactical challenges, but a solid rebound in Q4. Can you again give some more color? And what is the broader industry looking like? I mean, the global ER&D spending across OEMs?
Absolutely. And, outside of again, the issues we talked about, momentum is continuing to build. And that's what really has excited us about what we've seen in Q2. Our customers are making decisions. The demand environment is much improved. And much of the projects and the product investments that our customers were expected to make at the beginning of the fiscal year, we're now seeing that coming through. And we expect to build upon that in Q3 and in Q4.
But Warren, what about client spending? Are you seeing an improvement on that front, particularly in Europe? And what's the outlook for North America, given that it has remained soft in the last few quarters?
Well, we've seen growth across our three verticals: automotive, aerospace, and industrial heavy machinery, and we've also seen improvement in North America, Europe, and Asia Pacific. Europe has been strong for us in the second quarter, but so too has North America. And I think the disruptions that we've seen since January that were compounded by the tariff announcements in April. I think the uncertainty is starting to dissipate. Everybody's getting now aligned with the new normal, and as a result of that, they are starting to make the decisions again that we expected earlier in the year.
Has the Estech acquisition closed this time?
The Estech acquisition is not yet closed. We've still got regulatory approval in Germany and Morocco to confirm, but we anticipate that in November we'll get that acquisition closed, and so Estech will contribute to the growth story at Tata Technologies from about the December timeframe.
Warren, great chatting with you as always. Wish you all the very best. That is Tata Tech for you. It's an okay quarter. The stock is down close to about 0.6%. They see challenges in Q3, but in Q4, things should get back on the growth trajectory. We'll get into a break. On the other side, we'll invite the management of PNB to talk about their Q2 numbers. Stay tuned.